What's up, everybody? Welcome back to Wealth Not Wait. I'm your host, as always, Joseph Coizza, and today we are talking about the concept of an investor mindset, the important mindset you have to have while becoming an investor, the investor mindset that I carry through, and learning and building upon the investor mindset that Warren Buffett and all these other very successful investors and rich business people have. And things that I've learned in The Intelligent Investor, and just overall the important mindset you need to have when becoming an investor and starting investing. I talk about this a lot in the book. There are different ways you can go about investing. There are different mindsets you have to have for that. I am what is called a, not really traditional investor, but more of a value investor. It's said that anybody who invests with the purpose of buying at a cheaper price and selling high is a value investor. You're getting value. But the value investor standpoint, as far as talking about it, as I have said before, is you buy and you hold for a longer period of time to hopefully increase the amount of money that you can make off of it. A bird in the hand is worth two in the bush, according to Warren Buffett. You buy something at a lower price, you hold on to it traditionally for a longer period of time, talking over 10 years type of thing, over 10 years, not over the span of 10 years, but 10 years or more. And then you would sell it for hopefully however many birds is worth in that bush, essentially. You buy a stock for $10 and you sell it for $100, 10 years later. So, something along those lines. A value investor has usually, at least from my standard, has a set of rigorous requirements before they make an investment in a stock, or really anything in general, stocks especially. A good way that I've come up with this kind of rigorous thing is through reading the Intelligent Investor by Benjamin Graham. It took me a moment. The Intelligent Investor by Benjamin Graham. He is the teacher of Warren Buffett. Again, we talk about him in this book very much on the show. Single-handedly changed the way I look at money. Single-handedly changed the way I look at finance. And what I would say is probably the most important thing that set me down this financial journey. Even though I was looking at stuff before that, that's the thing that really kind of opened my eyes wide and also had me inspired to write a book. And then talk about my experience and what I view on it further. Warren Buffett went and took this, what Benjamin Graham had taught him, and adapted it and changed it to fit his needs. Are more of a modern time type thing, because back then the railroads were really big and this was going on, and utilities, and this was a much earlier age. Now you have tech companies, now you have Apple, and you have different stuff. You have cryptocurrencies and all this stuff running around that Benjamin Graham couldn't have even thought about. But now you're applying a set of important principles to a newer thing. Finding out, will these principles work? If so, how will they work? And essentially, it breaks it down into finding something that is not a colossal speculative risk. That's the difference between myself, an investor, and somebody who's a speculative person, somebody who day trades and all that. They're speculative. They're basing their value off of something that they feel it's going to be worth. It's worth $100 now, and 20 minutes from now, it's going to be worth $80. Let me sell it now and then buy it back and then resell it when it gets bigger. Speculative is coming up with a price in the future based usually not on a very solid set of factors. If you're like, oh, I know this is going to go on, I've seen this annual report, I got this, I have that, and you come to a solid, firm conclusion that this price is going to be worth X amount in the future. What we do as far as a value investor and somebody who is an investor, we have a rigorous requirement for stocks. They have to have a very prominent amount of their sector. You can't buy a small company that, 2 days from now they'll go out of business and nobody notices. You can if you want to take that risk, but usually we try to stay clear from that. Something big, something prominent in sector. This has been around. It's a firm part of society. It makes people's lives better, as Jeff Bezos talks about and what Shaq takes. Is it going to make society better? Does it improve people's lives? Bigger companies traditionally are the ones who have more opportunity to do that. Smaller companies, they're starting up, they're building, they have huge upside and potential to do that, but traditionally bigger companies are the ones doing stuff like that. Comparably to, let's just say, something like a Universal to like a Disney. Of course, Universal does a really, really good job. They're huge in the entertainment industry and they change people's lives through entertainment, but Disney is the one that does it. You think everybody loves Universal, but Disney Parks is the one that does it. They're the bigger one who did it, and they're doing it on a massive scale. They're truly changing people's lives. Sure, there's plenty of online websites and retailers that, would be good investments, but Amazon is the one that's truly changing people's lives. They're a prominent part of their sector. And then also, it's harder for them to go out of business. Macy's and stuff like that, they're a predominant retail sector, and they are not going out of business because of stuff like that, quite yet at least. But you have things like Sears, which kind of lost its prominency. It used to be this big thing, Sears catalog everything, and then it lost its prominency and it went out of business. because of online retail, because other retailers change and adapt, because they couldn't keep customer bases, because of high cost. You have these giant storefronts. Huge diversity, not really specialized in certain areas. The areas they specialized in weren't that great. Whole bunch of reasons why they went out of business. But essentially, it wasn't this huge prominent sector. People took notice, but it wasn't this massive thing in the sector. Like say if Amazon went out of business, we'd be in a problem. Like just tomorrow, I guess when Amazon closed, there'd be a significant issue. Same thing with Google, same thing with stuff like that. They're large prominent companies. Secondarily, it has to be paying out and be worth the investment. You don't want to throw money into it just because it's a big, cool company or you have some emotional attachment to it. I know I kind of did that in the past. I'm like, oh, I heard of this brand, or oh, I have a fond idea of this brand. That's a good start of saying, here are some brands I really like. Let me look into them and see which ones are worth it. But just don't invest into it because you're like, yeah, I kind of sort of heard of this brand. Or, oh, yeah, I know this brand. Or, oh, I like this thing. Usually that's not a great idea. It has to have a firm business behind it. A stock price is basically what anybody's willing to pay for it. Is a strong metric behind it, but ultimately stocks trade on a daily basis based on what people are willing to pay. Some people are willing to pay $10, some people will pay $20, some people are willing to pay $2. Depending on whatever the majority amount of people are going to pay, that's what it is that day. That's what it is that second. That's what it's going for. So you don't want to get stuck overpaying for something and you say, oh, this is a really great industry, but as far as the value, measure the business for the business itself. You're buying in, when Warren Buffett talks about it, he said, pretend like you're buying the whole business. You value the whole business. You say, okay, how much liability does it have? How much assets does it have? How is its cash flow? How's everything going? Is this a good business? Some people bought into the .com bubble because they're like, oh, the stock price is going up, but they knew nothing about the business metrics of it. As someone like a value investor like myself, I've read through countless fucking annual reports. I've read through countless letters. I vote on the proxies. I send in my statements. I go and I say, okay, if I'm on the board of XYZ company, or I'm a stockholder, not the board, I wish. If I was a stockholder of XYZ company, and I get a form saying, hey, how do you want? I look into it. I take the hour. I look into it and say, okay, here are the people I feel should run the company based on what they're giving me. No, I don't approve of this. They're going to hike this up and change this. I don't think that's good for investors or for business. This is good for this person, but not for what I'm going for. Yes, this is a great idea, and I go through and I vote on it. Most people don't do that if you're a speculative person. You don't vote on that. You hold it for a shorter period of time. You also pay more taxes for that. You pay capital gains. Capital gains, you hold it for a longer period of time, you end up paying less tax on it. You just kind of quick flip and sell it, then you're paying more tax on it. But the value investor mindset is someone who buys and holds for a longer period of time and traditionally puts in the same amount of money or however much money they can afford to put in over the course of a period of time. I'm not going to dump 10 grand into something just because I feel it's going to go up in a little bit. No, I could afford to do $100 a month or something. Let's just throw a number out there, $100 a month. So therefore I put $100 a month into my investments, and that's what I do consecutively. The market's up, I still put $100 in. The market's down, I still put $100 in, because I'm basing my investments off of strong factors. So I feel, regardless of how, like say during COVID, the whole market went down, I wasn't concerned about that. Obviously, seeing your worth in that portfolio drop a lot, it's concerning, but I wasn't like, oh, let me get out now. Because I know it's an outside factor. It doesn't affect the businesses itself. The businesses itself aren't bad businesses. It's affecting them and their production and all that stuff, but I know when things go back to normal, the businesses I've had invested in are strong, prominent businesses that have a good valuation, and hopefully during this process didn't take on a colossal amount of debt to their asset ratios, and the businesses themselves weren't compromised. Maybe they've been in a worse position than they were before, but they weren't compromised, and therefore still great businesses. That's why I put my money into them, because they weather through something like that. And then sure enough, as things got better, some of those businesses, a vast majority of them proved to be that, yeah, I did a good job. And of course, nobody's perfect, so I had a couple losers on that as well. The upside compared to the downside was better, but it still taught me something in saying, hey, well, I valued these businesses. Why did I value them the way I did? Oh, well, I had some emotional attachment to that. That's on my bad. I shouldn't have done that. Oh, I felt that this one was good, and maybe I skipped over this part of the annual report. Oh, the company was going in a different direction than I would have wanted it to. It wants to do this now. They pay less dividends. They want to go forward into this and switch their lines and do all this stuff now. I really didn't think that was a good direction for the company to be in, or that I wanted to be with. Not saying it's a bad company or anything like that. It's just not what I wanted to. That's why it didn't live up to the standards I had. Issues on your part, issue on as you're going through and doing stuff like that. Also, you don't do these quick investments or invest in a lot of things or take this colossal amount of risk without mitigating it. Risk is great. If you are wanting to achieve great things and do stuff, you're going to have to take risks. Investing in stocks is a huge risk, but you can mitigate that risk. If you invest in an index fund, you're mitigating that risk, and you're receiving about 10% on your investment every year. Someone like a value investor, like a traditional investor like myself, we're happy making a reasonably good sum to pretty good sum on our investment year after year continuously, and weathering through the storm and having some found strong basis of investment. Some people are like, oh, I want to make 20, 30% a year. Usually you make 10% a year. If investments make 10% a year, you're doing pretty good as far as investment standards. Some people are like, that's fucking too low. I want 200%, 2,000% my investment. I want to turn $200 into $2 million in 2 years. Great. If that's what you want to do, go for it. That's not really what I teach here. That's not really the value that I hold. Of course, I take some risks, and I took this from Mark Cuban. He somewhat shares the same value as a Warren Buffett type thing. And he also is a strong investor and a billionaire. He built his business up and now is a billionaire. But he said he takes a little bit of his money and then he'll put that into things that are kind of risky or crazy. Let's take some of the money and let's just throw it into something that I feel could really do good stuff, but it's just a huge risk. I don't want to put all my eggs in one basket, even though he's not a huge fan of diversity as far as diversifying his investments. And Warren Buffett and all of them aren't as well. I feel you need to have some platform of it. I'm sure they're not all invested in one thing. He's all invested in Berkshire Hathaway, but Berkshire Hathaway is invested in a whole bunch of different stuff. They own many businesses. So taking some of it, say like 10%, 5%, however much you want, and throwing it towards riskier things, throwing it towards stocks that you're like, I really don't feel that that's a great idea. I don't know though, because I like these factors, I don't like these factors. I'm on the fence about it. That's your risky investment. Bitcoin and cryptocurrency, a very speculative investment. It's not a huge, great traditional investment. Putting that 5% into stuff like that and seeing how it is. Because if you lose the money, it's no big deal. If you don't lose the money and you make great money, good. You make some good cash. As far as things like now Bitcoin and cryptocurrency, we're going to get in that a little bit. A couple years ago, it became a really solid investment. It broke the point where the government couldn't intervene to the degree it has a very mitigated risk that it can intervene with now. It wants people to start paying taxes on their cryptocurrency investments. The prices of everything went huge. Now there's a huge explosion of all these cryptocurrencies. And beforehand, you had the core ones, which grew in value significantly. And now you have these little ones, kind of like little companies. They could be big, or they could not be big, or they could just go flat. Who knows? Everybody and their mother has a cryptocurrency now. Same thing with the NFTs. You see these big things that everybody's just like, I can make good money. And I know some friends who invested and made really good money off cryptocurrencies and stuff like that. But for a traditional investor like myself, having a significant amount of your money into something that's very speculative, it doesn't have a sound basis. It is just this core part of the stock market. And you're just like, stocks are whatever everybody's willing to pay for it. The same thing with cryptocurrency. Whatever anybody's willing to pay for a Bitcoin, that's how much the price is. Yes, but there is a business behind it. Cryptocurrency, there is not. Same thing with gold. Same thing with money, really. Money has value because we believe it has value. But it's regulated. Cryptocurrency isn't. It could be $50,000 for a Bitcoin. It could be $20,000 for a Bitcoin. It could be this. It jumps. It's very volatile. You can make amazing amounts of money on it, but that's not my area of expertise. That's not what I do. That's not strongly what I believe in. So I, therefore, am going to tell you that you really shouldn't put a whole lot of money into cryptocurrencies if you don't know it very well or have all that. If you're just like, we're investing into this, and you're buying into hype, usually when things reach the news, the mainstream media, it's too late. That's another thing that big value investors like myself talk about is you just got to ignore people. When people are like, this is a great idea, blah, 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 and they're talking a big game, not talking to somebody like, look at this business, this, and they have some sound metrics, and here's how this goes, and here's what's going on with this. That's a different story. Then you could, interpret things and view it yourself and make your own decision. But when you hear news outlets and all these big things, and this is great, and this is in a magazine, and your aunt and your uncle are talking about it, and I heard about this. Once it's to that level, if it was a good, you could make a quick buck off of it, usually it's too late. Same thing with the AMC and all that stuff. When that popped up and the GameStop stock, as soon as it hit big media, trading halted. I'm not saying, however you look at that situation with all that, but essentially it's just trading halted, trading stopped. Even if you invested then at that point, you maybe would have made $20 on a stock in like a week. And then you had that for a couple of days and then it dropped back down. Once main media finds out about it, it's essentially done. It's dead in the water. People invest not because other people tell them it's a good idea. It's because they truly feel it is a sound investment. I've had people come up to me and, knowing I'm a big investment person or not, and try and upsell this. Oh, I buy into this one. I buy into these little companies with this medical thing, and I know this, and they talk a big game. Some people genuinely believe they're good investments. Some people, like I said, just try and talk a big game, and I tune them out. I hear out what people have to say, but if it's nothing really great, if it's nothing groundbreaking, if it's nothing that doesn't have substance to it, you just tune them out. That's essentially how you have to go with it. If it has substance to it, maybe I'll look into it. I'll see how it is. And almost every time I've heard of something like that, it hasn't worked out. There hasn't been something that somebody's told me about that I already didn't know about or didn't have an understanding about, that they said, oh, this is a great idea, and it turned out to be this great idea. The exception being back in the day when I first got offered Bitcoin, they were, my friend of mine told, and he was explaining to me, and I didn't understand the concept at the time. Of course, this was all brand new. Bitcoin was the first thing that we really hit mainstream to know about it. And back then, this was like when first YouTube mining videos started coming out. And here, I'm mining this Bitcoin thing, and it wasn't as big as it was today. Nowhere near. This was like the infancy of it. I'm talking year two, level Bitcoin. So you could have made a lot of money through that. That, if I could go back, then maybe I'd invest in it. But it didn't sound like a great idea, and therefore I didn't put money into it. Obviously it turned out to be a great idea. Sometimes you miss out on things, but that's another thing that investor mindset has, is you don't need to swing at every pitch that comes your way. Like Warren Buffett says, but when you do swing, when you do invest your money, when you do make an investment decision, make sure it's a good one. That's all you have to do. He said if you had a punch card and you get 10 punches of the investments you make in your life, a lot more people would be very focused on the investments that they make, and a lot more people would avoid mistakes. You'd be, okay, I'm going to make this investment because I feel this is a good idea. This is one of my 10 punches, that's it. He goes, and then you'd probably make a lot of money and you'd be very wealthy from it. And because your people don't just throw money to win and, I fucked off, it didn't work, this. And a lot of people go with the hype. You wouldn't go with the hype if you only had 10 punches. You'd have to be very certain of the investments you were going to make. So the same thing with that, when I do stuff, I'm making sure it's a good investment. Yes, of course, I'm taking a huge risk with it, but you're mitigating your risk by having some sound basis. I believe that this is going to be a good investment, so therefore I will invest into it. I firmly base it with these factors. I'm not taking an emotion, I'm not taking the hype. This is what I've looked at. I've looked at the numbers. I've seen how it is. I looked at the manager. I viewed it. I've done my research. A lot of them take 2-3 days of me really pouring through papers and learning about the managers and learning about the board and looking at stuff for me to make a good decision and say, is this something that I want to look into further? Maybe not even make an investment at that point, but look at to further. You want to act quick. You want to act efficiently and really go for something when you do it, but you want to be certain when mitigating risks. You want to have a good idea and say, okay, this isn't just throw money to the wind and hope it's going to come back. I'm mitigating my risks. I believe this is a strong investment. I'm going to go for it. That's basically investor mindset. Is not getting worried about stuff like that. Not buying into the hype. Buying into stuff with some found basis, some strong requirements. You have discipline and principle to mitigate those risks. And you could take larger risks, but you have to have a strong portfolio to begin with. If you have a strong portfolio and you're not just throwing all your money into something and just kind of hoping it works out. A lot of people got rich that way. Far be it from me to tear down those people who have done really well for it. But traditionally, that's just not going to work out well for you. And that's not the way I preach and do things myself. So therefore, I cannot, if I'm not going to do it myself, I can't ask other people to do it. I'm not going to say, oh yeah, go out and do it. It's a really good idea, but I wouldn't take that risk myself. I want to go and take the risk and jump head first and do it. And then I would be able to tell people. Otherwise, I think if it's just a bad idea. Like just throwing money whenever somebody says, put this into this cryptocurrency, and then you just throw money into it. Sometimes it works out. A lot of times it doesn't as well. But having a strong basis, having strong requirements, really knowing your area of expertise. Like I said, stocks and stuff, I'm sure real estate's a great investment. I'm sure if I was this, I knew what I knew about stocks, but instead I knew it about cryptocurrency, I'm sure I'd be all for cryptocurrency and I know the way to make money off of it. But I don't know that area of expertise, so I'm not just going to throw money into something I have no understanding of. Learning about it and then becoming well educated and doing that, that's a different story. But not knowing anything about it and just kind of putting money into it when you're a very basic novice level, especially a large amount of money, is probably not a great idea. Something a business, you could jump head first and try to figure out as you go along. You could do that, but if you're just throwing money to the wind and just saying, I hope it works out, that's usually not a great idea. You want to have some area of expertise into it. Same thing about businesses. I know how businesses should be run. I have an understanding about it. I know what I see firsthand. what I've been through. I'm constantly learning, constantly reading, trying to improve. I'm not perfect, but I tend to take that knowledge and apply it to businesses. Well, how is this business run? Here's what I know of accounting. Here's what I know of this. This doesn't look right. What other, well, let me look it up. Oh, yeah, it's a lot of it. This doesn't look right. I don't feel comfortable putting money in this. Why doesn't it look right? Oh, well, they did this. That's a little unorthodox. I'm not too thrilled with that. Or, oh, they made some interesting decisions financially and with managers and stuff. I really don't like this manager running this company. Therefore, I'm not going to invest my money because I don't value the person in leadership there. You don't value them. You don't respect that idea. I'm not going to give them money to over and say, okay, yeah, do a good job. It may be a great company, but if they have a shit manager, it's not going to work out well because they can run a great company into the ground. Great manager, bad company, you got some wiggle room. But you have to have these requirements. You have to have all that. Something I learned, like I said, if you want to look out more for an investor mindset, check out, obviously, Wealth Not Weight. Obviously, my book. That's the first thing I'm going for. Check that out for sure. I talked a lot about mindset, just mindset in general, but then also investor mindset when coming into it and applying those reasonable amounts of money, what you could afford over time into good investments. That's a great way to make money and be rich by the time you retire, or if you do it very well, retire early, financial retirement at an early age. But to build wealth, that is a great way to do it, and having that investor mindset. The Intelligent Investor talks about why I came up with my investment strategy. It also breaks down what Warren Buffett talks about a little bit more. It gives you the basis on his understanding. Of course, he changed it and altered it over the years. Like I said, Apple and Bitcoin were things that weren't back in Benjamin Graham's day. But now he understands and he applies it. And like I said, he makes mistakes too. Look at Warren Buffett videos. Look at anybody who's successful, Mark Cuban, any major investors. Or any major business person will talk to you about investments. They'll talk to you about investor mindset, about weathering the storm. There are some people out there who, you got to jump from this, and people who made a lot of really good money, but aren't these big, major people who have solid foundations. You have to be careful of who you listen to as far as mentors, and when you gain that mindset from. People out there will tell you all different types of ways to get rich, because there's about 1 billion different ways for you to get rich. But a lot of these major people who strike it big and have a lot of these wealth and have a lot of this influence and have a lot of that good stuff that everybody's looking for in success, have a strong basis and discipline. And that's kind of what I preach for the investor mindset. Sure, you could take risks. Sure, you could, shoot out a wild card every now and then if you feel it's going to be a really great idea and you're swinging for the fences for that home run. But you have to mitigate your risk, and you have to have a strong mindset to know when to mitigate the risk, to know when something is a good investment, wear out the storm even when things are dropping. And make sure you are on the set path and not just act erratically. You have discipline, you have a strong idea, you do it by the books, and you go for it. That is the best way to do it with an investor mindset. Long term, nothing super short, really going for it with that level of mindset. That, in my mind, is the investor mindset. That's the mindset I have. And of course, it's always changing, altering, maybe different from when I first started doing these videos and maybe different from when later on when I'm doing these videos. But the core value of having strong basis, really not just being speculative, having a strong idea and weathering through a storm, expecting good returns, taking good risks, but mitigating so you're taking less of a risk to get more of a reward. And thinking logically and reasonably instead of irrationally and emotionally. That's always going to be the core basis of it. And finding a good investment and building a wealth. And that also helped me then with, obviously building my body. And, okay, well, I'm not going to just eat erratically because I really want this cookie. You have a good, mindset. Okay, what am I going to eat today? Am I going to eat this salad or am I going to eat this chicken sandwich? You can make the determination. Well, I know based on nutrition and based on facts, you can apply that mindset to other aspects of your life. Relationships. I know, nobody wants to psychoanalyze a relationship, but sometimes you kind of have to do stuff like that. I really recognize all of these red flags. I don't think we're going to be good together, so therefore maybe I shouldn't see this person. I really like them, or they're really attractive, or there's aspects of this relationship I really like, but ultimately there's a lot that I don't like. I'm a little worried about this. I don't trust them, like trusting a business, trusting a manager. I don't trust them. They're a really great person, but I don't trust they're not going to go out and cheat on me. Probably shouldn't be in a relationship. You could apply this mindset to a lot of different stuff other than just investing. But having a good, strong investor mindset, just having that tool is going to help you become wealthy, happy, and wise, and hopefully healthy as well. And that's why I have it. That's why I've seen it works with a lot of people. And that's why I continue to build upon it and have that kind of mindset. So if you guys like this video, or you have any questions, comments, or concerns, be sure to leave them in the comments below. And I shall see you all next time. Make sure you like, comment, and subscribe, and I'll see you all next time. Peace.